Let's talk about the balance sheet, still chapter 6 of your book. This is just a picture from chapter 6. Here's a picture of a balance sheet. I don't have it quite all in one screen, but I'll show it to you. So the balance sheet is a summary of assets equals liabilities plus equity. So it's kind of a balance check. That's why it's called the balance sheet. It represents a point in time, typically the last day of an accounting period, a month, a quarter, a year, whatever that would be. And so it organizes the sum of assets to make sure they equal the sum of liabilities plus equity. So just some examples of assets. They're split into current and long-term. Current assets, you can see right here, there's plenty of examples there: cash, petty cash, receivables, inventory, prepaids. Long-term liabilities, or sorry, fixed assets, let me got ahead of myself. Fixed assets are more property, plant, and equipment, assets that will typically last for more than 1 year. So generally, I think a current asset lasts 1 year or less. A fixed asset will typically last for more than 1 year. Building, land, property, plant, and equipment type items that you can see here. Okay, so those are all examples. You can see the total down here is 470,418. Over on the right-hand side there, I've got current liabilities, typically bills due within 1 year or less, quite often much less than 1 year. The usual suspects like accounts payable, interest payable, things like that. Definitely taxes payable, both federal income tax and various employment taxes may also be due. And long-term liabilities typically deal with borrowed money, any kind of a long-term payable. So you could have a short-term payable to a bank, any bank loan due within 1 year or less, or a long-term payable due to a bank, just anything due after 1 year. Then we can scroll down here and then see the equity section for a proprietorship or a partnership, where it'd be either one person for a proprietorship or two or more people for a partnership. It's their equity in the business. Or a corporation, then it would include capital stock, paid-in capital, retained earnings, and so on. But the sum of 215,290 and 255,128 then equals the 470,418. Okay, and then it measures down here the accounting equation. Assets equals liabilities plus equity. You can rearrange that a couple different ways and go assets minus liabilities equals equity or net worth. Or you can say liabilities plus equity equals total assets. It's just kind of rearranging the same thing a few different ways. Okay, so chapter 6, the balance sheet, represents a point in time summarizing assets equaling liabilities plus equity.